Would you take money away from your 80-year-old self to solve your adult child's problem today? Most parents would never think about it that way. We think, my child needs help, and I have more money than they do. I don't want them to struggle. Or, they are my child. What else am I supposed to do? But every dollar you give away during your retirement, or shortly before retirement, is a dollar that may not be available to you when you're older and have fewer ways to replace it. If money feels stressful, overwhelming, or just downright emotionally exhausting, let's take control of that one money move at a time. I'm Monica Allen, and I want to be your financial therapist. I totally believe in helping family. I believe in generosity. And there may be times when helping an adult child is exactly what you want to do and should do. But do not risk your retirement trying to make sure your grown children never experience financial discomfort. Your adult children may be able to borrow for graduate school. They may qualify for a mortgage to purchase a house. Loans and payment plans may be available for vehicles, education, or their own children's schooling. But you cannot take out a loan to fund your retirement. Once you stop working, your income may have much less flexibility. You may be living on Social Security, a pension, and withdrawals from accounts that have to support you for the rest of your life, you and your health and your emergencies. Your child may have decades of earning power ahead of them, and you may not. A 2025 AARP survey found that 75% of parents age 45 and older were financially supporting at least one adult child. I think it's one thing for them to be living with you and hopefully contributing, and it's another thing to totally be paying their bills in another place. Parents provided an average of about $7,000 annually, although the median was much lower at $1,400. 42% reported financial stress connected to that support. Helping grown children is common. That does not mean every parent, though, can safely afford it. Here are 3 moves to make before saying yes. First, protect your own retirement. Before giving money, ask, can I pay my regular bills? Is my emergency fund intact? Am I contributing what I need for retirement? If I'm already retired, does my plan allow for this gift without increasing that I run out of money later? Your children can adjust their timeline. They can attend a less expensive school, buy a smaller house, drive a used car, wait another year, work more hours, or borrow when borrowing makes sense. You cannot go back and recreate decades of retirement savings once the money is gone. Taking care of yourself is not at all abandoning your children. It may prevent you from becoming financially dependent on them later. They are not going to be able to support you in retirement because they're going to be financially strapped themselves. Second, let help be a gift, not an expectation. Help should be something you freely choose. It should not be something your adult children assume you will provide every time there is a shortfall. Decide in advance what kinds of expenses you're willing to help with. Maybe you could contribute to education, but not credit card debt. Maybe you'll help with a true emergency, but not a vacation. Maybe you will give each child a particular amount and allow them to decide how to use it. You are allowed to be generous without becoming the family bank. Third, do not give away money you cannot afford to lose. Calling money a loan does not guarantee that it will return. Dave Ramsey says when you loan people money, Thanksgiving dinner tastes terrible because they won't want to come. There's this tension, especially if they can't pay it back. And if you need that money, if you need it back to pay your own bills, you probably cannot afford to lend it. Most of the time, I try to give what I can to someone rather than lend, because lending just puts that bad taste in your mouth. Either structure the loan formally with clear terms or treat the money as a gift and assume it may never come back. Do not give it while secretly expecting repayment and then allow resentment to damage your relationship. You don't want that. You don't want to end up lonely over money as you get older. And remember that rescuing someone repeatedly can prevent them from building their own financial muscles. And if you're helping people more than they're helping themselves, it's not helping. Sometimes the most loving answer is, I cannot pay for this, but I will help you look at your options. Here's your financial therapy moment. Parents often believe that saying no to money means saying no to their child, and it does not. You can love your adult children deeply without removing every difficult consequence or funding every goal that they have. Your responsibility is not to make adulthood painless for them. Your responsibility is to help when you reasonably can without sacrificing the future you spent decades building. Your challenge is to choose an annual amount you can safely give to adult children or grandchildren. It may be a generous amount. It may be zero for right now. Either answer is okay when it is based on your real financial situation. Then decide which expenses you are willing to support and which ones belong to them. Tell me in the comments, which is harder for you, saying no to an adult child or worrying that helping them could hurt your own future? In the next video, we'll be talking about how guilt, family expectations, and fear can influence financial decisions long after our children are grown. Remember though, no matter where you are financially, there's always another move. Now go make one more money move today, and I'll see you in the next episode. Have a great day.